Purchasing a property usually comes with the expectation that its price will rise over time, and this would help to lower the loan-to-value of the debt. For the property sector itself, demand appears to have returned following the reopening of the economy. However, developers are also facing their own sets of challenges that range from elevated building material pricing to labour shortage and rising financing costs. Now, is the sector going to see steady growth and demand this year, even in a moderately rising interest rate environment? I'm Anita Wu, and this is Money Matters. Malaysia is seeing some improvement in the real estate market as consumers grapple with lingering post-COVID-19 effects. Consumer sentiment in the market is likely to improve alongside the nation's economic recovery as the year progresses. Now, joining me in studio today is Chai Kian Soon, Senior General Manager of Bandar Rimbayu Sdn Bhd. Welcome to Money Matters, and thank you for joining us here today, Kian Soon.
Thank you for having me.
Let's begin with our first question, which is about Bandar Rimbayu itself and developing residential but also commercial hubs as well. Can you tell us more about that and of the projects that stand out in your portfolio?
IJM Rimbayu basically is a 1,800 acres of development located in Selangor, the state of Selangor, and it is actually next to a development which is called Kota Kemuning. Right, and of course the surrounding neighbours are like Subang Jaya, Shah Alam, and Klang. So in terms of the accessibility, we have a few highways that actually link up to this particular development. Well, they are Kesas Highway on the northern side, South Klang Valley Expressway on the southern, Elite Highway on the eastern side, and of course the West Coast Expressway that's under construction, which is coming soon to be ready in year 2024. Yeah.
What's the name of this development?
This is called IJM Rimbayu.
IJM Rimbayu itself. Right. And I also heard about another project which had commercial as well as industrial hubs side by side next to each other. Can you tell us more about that? Within
this development, IJM Rimbayu, basically we have residential development as one of our main components. Other than that, currently we are working towards building or introducing our industrial and commercial hub.
And they're next to each other?
They're next to each other and it's linked up.
So that's really good synergy.
That's right.
And linkages in a way.
Definitely.
For both residents and the commercial sector.
Yes, all three of them. In fact, residential, commercial and industrial. That's right.
Okay. Now, the construction industry's biggest challenge so far, it's been well established, has been the shortage of skilled labour, contributing to project delays as well as less access to building materials and products. Can you tell us how this has affected your company?
Well, I think, yes, the whole industry is impacted by these few factors that you have mentioned just now. In particular, the material price increase. The supply chain has contributed a lot to that as well, the increase in material price. And of course, the labor, at this point of time, the labor issue is actually in a very critical condition right now, affecting developers in a very big way.
Yes.
You are talking about increase in cost as well as delay in the projects. And of course, the other factor is really the rising interest costs and borrowing costs. All these factors are the headwinds that all the developers are facing at this point of time. And the impact is really, first, is on the price of the houses. The question is, should the developer now transfer the price, this cost increase all the way to the
consumer? That doesn't seem fair, right? But there must be strategies.
Yes, there must be strategies. Or is it that the developer themselves are going to take the hit, which will have a compression on their margin? Well, that is a big question as far as we're concerned, because if the margin is too thin, the developer will likely to delay selling of houses or launches for that matter. that will have a far-fetching impact in the market because there will be supply issue going down the road later. So again, there will be another round of probably price increase again.
Right.
It's a chicken and egg thing all the way, you know.
Yes.
So as such, what do we do? Is it transferring part of the cost down to the purchaser and partly supply our margin compression? These are the thoughts that we have to go through in each of our development, in each of our phases, so that we will have to balance that part of it.
Right.
That is what.
Does the difference in asset classes also play a role in that, in terms of strategy?
Oh, yes. For residential properties, basically, you have different target group. You have those which are bread and butter or those affordable type, where it is very price sensitive. In other words, there is a little bit of increase in price, the demand will probably drop quite drastically. Whereas another asset class, which is a higher price property, where the target market group is really the more of probably the T20 group, and the price is a bit more inelastic, meaning to say if there is a price increase in the property, when there's a loan-to-value compression, the increase in the interest rate and the borrowing, that has probably less impact on the demand of those property.
All right. Well, a quick final question, because before we go for a break, you had mentioned earlier about the rising cost of prices also due to the global supply chain disruption. This is obviously because of the war in Russia and Ukraine, and it still has its lingering effects. Can you foresee that input costs are going to be remaining elevated for a while? And what are some of the strategies that you have in place to mitigate the impact?
Well, I think yes, because the lingering war itself, the fuel price increase has been very prevalent. However, it has leveled off a little bit in the current times. But we would not be able to foresee in certainty going forward, the impact really on the price increase. Well, we have to make a lot of assumptions that yes, it will actually continue as a challenge for us in terms of price increase. Well, with that, I think like our strategy that we put forward is that we will be focusing on certain property type, which is less price inelastic, like I mentioned just now, and probably also for the affordable markets, we will be looking at the younger populations and maybe the upgraders and probably empty nesters. These are the group where when they are young, they are able to finance the property in a longer period of time. Meaning to say the installment payment will be cheaper, and as such, it is much more affordable in a sense. Whereas the empty nesters, when the children grows up, well, they have a big house which they need to downsize,
Correct.
Not because of affordability, but they're able to refinance their existing house, right? With that kind of money, downsizing in a smaller unit, that is also a good target market.
These are very interesting insights.
This is how we actually position ourselves.
Thank you, Kian Soon. Now, hold that thought. We'll come back to it after the break. We're heading for a quick short break, but do stay tuned. More on Money Matters. Welcome back to Money Matters. We have Bandar Rimbayu Sdn Bhd Senior General Manager with us today, Chai Kian Soon, in studio. Kian Soon, can you tell us, in the development and property sector, one of the most important things is detailed and strategic planning. Now, you had touched upon just before the break in terms of how some of that strategy has pivoted to a different focus in terms of consumers. Can you tell us what else your approach has been, especially in these volatile past few years?
Yes, the past 2 years has been the MCO period, whereby a lot of businesses and businesses like us in particular, whereby we rely a lot on purchaser walking to our sales office, sales gallery before, and then walk to our showroom as well, in order for them to choose the unit before they make a decision to buy. Well, these are very challenging during the past 2 years. During the MCO, there were locked down and so on and so forth. However, we are lucky because prior to the pandemic, we have invested into online sales and technology in particular.
Okay.
Well, that lockdown in particular has hastened the implementation of the online sales and promotions and so on.
Are you using anything such as virtual and augmented reality? Because nowadays, you know, you've got, with technology at your fingertips, you can take a virtual 360 tour from the comfort of your home and at the touch of a button. So
Yes.
has that already been adopted? And do you think that this is going to be a trend moving forward with the industry overall?
Yes, definitely. The virtual reality is something that we have implemented, whereby the purchasers are able to look at the property that we have to offer in the comfort of their home and at any point of time, right? As such, that is definitely one of the features that we have. The other thing is obviously the sales itself. The sales itself, we have conducted it online. Without the presence of the purchaser coming to the show office and choose the unit concerned. It's all conducted online, meaning to say the purchaser can choose from the laptop, from the iPad itself.
Has that increased your market to a more global market as well?
Globally, no, but in particular in relation to our Malaysian property market and targeting the young people who are much more savvy internet-wise. Yeah.
Okay. Let's talk technology on another scale. Let's talk about how emerging technology such as big data and analytics has started to be used in real estate. And so they can use actually historical and real-time data information to provide insights into patterns, how to price associations, demographic data and potential value even in specific locations. Has this already been adopted in the industry currently? And what potential impact do you see of this kind of technology transforming the industry?
Yes, as many developers actually has been relying on big data. This information are available today because social media people are online all the time. And of course, the information are being purchased from online service providers, basically, right? And at the point of time now, developer like us, we are actually moving towards collecting the data ourselves.
Okay.
That is one of the way we are approaching it. Well, so
what are you doing with this data?
Well, we have to analyze it, and actually it helps a lot in terms of identifying the target markets, basically the age, you know, their income level, where they are from, and so on and so forth. That enables us to actually target the market itself.
You mentioned something earlier about a metaverse in the works. Can you tell us more about that?
Yes, moving forward, obviously, we are also going into other than virtual reality. Now we are exploring metaverse itself. Metaverse is something that is much more immersive. Today, games are very much immersive. Therefore, in terms of selling property, we have to go into that direction as well, whereby in the virtual world, you are able to probably see the property yourself, look at the property itself as if you are in the property itself. That is one way. Or you can test it out, the property, by having yourself staying in that virtual world, staying in the virtual house itself.
It's very
before
immersive.
Buying it.
Wow.
So we should be exploring that direction right now.
That's fantastic. That's quite cutting edge, actually.
Yeah.
Are there other people in the industry that you could see more linkages to team up with in order to create kind of like another complete metaverse in the property sector?
Well, I think this whole industry has to move along in order to have the cost benefit of it as such. If we were to go in alone, I think the cost is simply too expensive. Nevertheless, we are exploring with a lot of service providers to explore how we should have a head start in this area.
This is fantastic, very cutting edge, congratulations. And that sounds like an invitation for the rest of the industry as well.
That's right.
We'll return right after this breather, don't go away. Thank you for staying with us on Money Matters. Our guest today is Chai Kian Soon of Bandar Rimbayu Sdn Bhd. So, Kian Soon, can you tell us what support has the Selangor business ecosystem offered that has been imperative to your business operations?
Well, Selangor has been a state that are very friendly as far as business policies is concerned. And the agency concerned, which is Invest Selangor, has been very helpful. Actually, in particular, linking us as a developer up with the industrial players.
Right.
While they need land or they need properties. Therefore, that's where Invest Selangor came in to link us up. That is a good, good marriage in a sense.
It's fantastic. Yeah. What are some of the key criteria as well that investors consider when setting up business in a location or industrial park or industrial hub? Not just in terms of someone who's received this invitation, but also someone who, from the point of view of Rimbayu, providing this industrial hub as well as commercial hub. And how do you see Selangor and its initiatives being able to continue to attract domestic as well as foreign investors?
Well, as far as Rimbayu is concerned, we are a township developer. Therefore, we do have a lot of housing that provide accommodation. Not only that, accommodation is one thing. The other one is the human resource that support the industry, whether it's commercial or in the industry. Other than that, of course, the infrastructure that we put in, the road system, the internet connectivities, the water, electricity, stable water, electricity, that is an important component.
Which Selangor obviously has contributed to in terms of infrastructure.
Definitely.
Right.
This is how they have helped as far as concerned. And policy-wise, they are very flexible. There are a lot of engagement with the stakeholders and they're listening. That's important.
Yeah, a conversation.
Yes.
All right. And now that the budget 2023 is coming up, do you have a wish list or some things that you'd like to see more of in this upcoming budget from your industry?
Yes, definitely. We would like, if possible, the government to give a bit more incentive in the form of stamp duty waivers to the purchasers who are buying properties with us. That's number one. Number two is that we have a shortage of labour. Therefore, we are moving towards industrial building systems.
Yes. Yeah, Tell us more about that.
In that sense, we will be able to reduce the reliance on foreign labours. And as such, however, the capital in terms of investment is pretty high. We hope that the government, in this case, will give incentive for developers who are adopting the IBS.
Is this partially technology, this industrial building systems?
Yes, it's not really a new technology, but because they are competing labour, which are cheaper in the market at this point in time, that has probably prevented a lot of developers from adopting the full IBS. It's a technology-driven kind of industrial building. Right.
So when you have IBS, does that mean that with the industrial building systems, does that mean that it is something that all the players can be involved in? Or does each one kind of have to have their own IBS, this system?
Yes. Basically, the industry can come together. There are a few big IBS supplier or
providers.
The providers. If that, we can actually rely on those big players, basically. That will help.
Okay. And can you tell us about the outlook that you have this year? You know, I mean, as you said, there are a few headwinds. One of them includes anticipated rising OPR rates and interest rates. So can you tell us what your anticipations are for this year, projections?
Well, we see that it's going to be tough as far as we're concerned going forward with the headwinds. However, we are still positive that this would probably, the developers are able to overcome this in their respective manner, like the strategy that ourselves we have put it in, as we mentioned earlier on. Right.
Okay, thank you very much, Chai Kian Soon, for being here with us today.
Thank you very much.
Looks like this is all the time we have for this week. We thank you very much for your insights on Money Matters, and we'll be back next week with more money insights that matter. Until then, I'm Manita Wu. Thank you for watching.